Well, I'll just start by saying the backdrop is the numbers are pointing to continued strength in terms of the trend, 200,000 a month on payrolls, at least gradual acceleration in wages. I mean, in terms of what we see today, I think personally we're probably due for a little bit slower on the payroll number, 160, probably the weakest in 3 months.
Is that going to be also because of Florence?
I think a little bit from Florence, although Florence hit after the sample week started, so I don't think there'll be a big effect, but maybe a little. And just September numbers have tended to be low on the first print and revised up later as well. I mean, as far as wages go, last month we got a pretty strong 0.4%. The trend's been more like 0.2% per month. I mean, I've got 0.3%, which I guess is pretty much consensus. So a pretty solid gain, although the 12-month change, which gets a lot of attention, will probably come down because you're dropping out a very strong 0.5% a year ago when you had hurricanes Harvey and Maria, and then that reversed in October. So I think the trend here is up, and I do think you get pretty solid monthly numbers in terms of wages this month.
Drew, what's going on? And we'll talk about this number in just a moment, but you are seeing yields really pick up. Yesterday, there were some wobbles in equities, and it was blamed on that. Is that a legitimate concern, and is it one that you have?
I mean, I think it's a legitimate concern. I don't think yesterday's move in equities, though, had to do with higher yields because utilities were higher. And usually if yields go up, utilities would go down. Utilities were rallying yesterday.
It was still only a 200-point decline for the Dow, but people are watching yields hit levels they haven't seen in years.
Yes.
And that makes people think, okay, is this a real turning point?
Yeah, so I think it's a combination of things. I think Powell's comments are being overlooked. He basically came out and said, growth is stronger. Maybe the neutral rate's higher.
I mean, 2 days ago, in his comments,
yes,
when he said we're going to go through neutral, and we're nowhere near neutral right now.
And we're nowhere near neutral. And then you have all this positive news on the economy. The ISM surveys have been very, very strong, kind of early cycle readings almost. And if you get to the number today and you get a reasonably healthy payroll number like Jim's looking for, I think people are just going to take that and run with it.
Run with that meaning sell equities?
I think they're going to be more optimistic on the growth outlook, and I think that means yields could go higher on that.
We're getting into that scenario again, where good news is potentially bad news because people worry. Good news on the economic front means the Fed is going to be more active.
Well, I think people are going to have to look at that going forward because I think that's the environment we're heading into. But I also think we should consider the fact that the reason the Fed's going to be doing more is because trend rate of growth in the economy seems to be accelerating.
So if you've got a good economy, you've got good earnings and a lot of potential for these things, would you be buying stocks anyway? Say, forget about the Fed.
I think for the next few months, I think I'd be more risk on. So I don't really look at stocks on a day-to-day basis. I looked at utilities yesterday because I wanted to see if yields were in fact the reason. But we do expect yields to move higher, and we do think riskier assets are going to do better in the current environment. From a fixed income perspective, at least.